Okay, hey everybody, Dan Fitzpatrick here, stockmarketmentor.com, and this is Nvidia. Now finally, today, the stock broke through 500, which is a little bit weird, but at the same time, a little bit telling. It traded as high as 506, and you can see by where it's trading now and where it closed, it's like right there. Very close to this regular hours, very close to the all-time high. And so what does this really tell us? Well, they report earnings 24 hours from now, by the time at the market close tomorrow. And as you probably know, you better know, the stock's been trading between 500 and 400. It just couldn't push through $500. And my sense has been that if it does push through 500, this thing can go a lot further. In other words, like, I don't really think you'd even have to be rushing in to buy this before earnings tomorrow because, oh, you're afraid to miss the move. If they report earnings that the market likes, and that involves not just what they made, because you know they made a crap ton of money, but also what their guidance is, things like that. Like what they say on the conference call is going to be a big deal. In particular, like how does China fit into all this? Like what's up with that? Because the U.S. is not letting them do business with China in with certain technology, and I don't really know that much about it. And you should be happy that I'm telling you that, because I'm therefore not representing that I know more than I actually do. Bottom line is, not me, but other people in the government, don't want China getting all this technology. So they're probably going to get it one way or another anyway, but that's okay. If you're not cheating, you're not really trying. So the bottom line, though, is we need to hear more about that so that we can get a sense of whether analysts are going to start raising their price targets further. Like I had told Charles Payne, this was just after they, I think it was just after they reported earnings, where I was saying if the stock could push through 500, it could even go as far as 1,000. And that's just based on measured moves and also just kind of knowing what I know, or what I think I know anyway, about how analysts work as far as continuing to chase a rapidly growing company like Nvidia, continuing to chase the stock higher, always trying to, and this is what they have to do, always trying to stay ahead of the game. Like, oh, my price target was $450. Oh, well, crap, it's $500. The company's doing awesome, so I can't keep it there, and I'm not going to put it up at 500. I know, 650. Hey, that's it. That's my new price target. And then the stock starts running up to there, and pretty soon that becomes, not high enough. And so they consistently try to stay ahead of the price. And as the price, if the price starts to go like parabolic, then their price targets have to keep getting higher and higher and higher and higher as they try to stay ahead of the price. And then, so fine, the price keeps going up, their price targets go higher, oh, they're looking like superstars all the way up to here. But then as soon as the company reports anything that does not give everybody the good touchy-feelies, that they report something that makes analysts think that maybe, these guys are growing freaking awesome. They're growing amazing. It seems like maybe they're kind of slowing down just a little bit. Then suddenly, these price targets all go away. And this went up to there, and then suddenly the big nosedive happens. We've seen this with these high-flying companies before. So we could indeed see this with Nvidia. And today's price action doesn't give us clues one way or another. I think this is institutional buying. The day before earnings are released, maybe it's just short covering. Maybe, I don't know, it's an interplay between the options market and the stock market. I don't know. But I'll tell you this, psychologically, it's an important thing for the bulls. Also, just technically, hey man, it shows us that there is demand for the stock above 500, which was the all-time high back here when earnings were released. So the difference is, like, this thing popped up bigly, over 6% from the close into the next morning. It actually went up. I remember this. It actually went up well above $500 pre-market. And so the point is, this is at a new high. So psychologically is a good thing. Also, nobody's a loser. Where this stock is right now, every single person holding this stock is making money. And that always makes me kind of happy if I'm one of those guys. So this is the thing, though. What I'm looking at now based on the options market is, and this is just an implied move, you can get this any number of ways by looking at a straddle of the at-the-money options on the front month or front week expiration. You add them both together and divide, and then you take a certain percentage. Screw it. Look at the upper right-hand corner of your Thinkorswim trading grid, and you'll see the number right there, implied move. It gives you a percent. I don't really care about that. I care about the number. $38 is right now, and that'll change between now and tomorrow. But it won't change that much. The implied move is $38 up or down from where the stock is right now. So where it is currently here, it tells us that on the upside, the maximum that the market is expecting the stock to move is up to 543. And the maximum the market is expecting the stock to move down if it sells off is 467. So I've just kind of drawn this box, generally speaking, right here. So the market, the options market, is expecting the stock to stay within this range. Now, with that said, and this is important, particularly on the downside, you need to be mindful of this number. And here's why. Because let's say the numbers come in and the market doesn't like it. Well, if I've seen this happen so many times, if the stock falls down and it opens outside here, like let's say it opens at 450 or 460, and it might, I don't know why or whether it would, but it might. So if it opens here, like just below this line, you got to fade that move. You got to buy that move because of this implied move box here. When a stock falls out of it, it will tend to snap back within it because it's breaking the laws of probability. At the same time, if the stock gaps up above this level here, you want to be fading that trend because, yeah, the numbers are great and this and that and the other thing. But if this thing is up above 543, guys, there's going to be sellers coming in that are taking those profits and they'll say, thank you very much. Then they'll wait for 2, 3, 4 days. They'll wait till next week. And then they'll buy the thing back for a lower price. And so that's why I've kind of made this box into a little green box, because in here is where the money is. And that is where the stock is going to tend to go to if it goes outside that box. My bet is it'll probably just kind of stay in here, but I do sense that we've got an upside bias here on this. So just know that on a stock like this, holding the stock, or certain, I sure as hell wouldn't be short it, but holding the stock over earnings is always a very risky thing. Certainly holding calls, like some of you guys like to speculate on call options, just know this, that your downside is limited when you're buying call options. When you own call options, your downside is limited, and I'm not joking here or being flippant. It's limited to the amount that you bought it for. So if you're buying front month or front week options under the anticipation that the stock's going to really jump, and so you got a bunch of call options, Maybe that's the case. However, you also have to know that the market's already priced that possibility in, so it's already baked into the price of the option. But so you could be long calls and do really, really well. But if the stock goes the other way, it is very, very lonely in your world, because you're going to be long calls that nobody wants because everybody sees the same thing. So you're left in a situation where it's a game called, how come nobody wants my options? And you don't want to be playing that game. So just be mindful of, if you're going to buy call options or puts or whatever, just know that you're putting 100% of it at risk. And so if you want to, spin the wheel with a little bit of money that you're totally willing to lose it all in order to have some fun, then go ahead and do that. But if you're looking at it and saying, well, I got a real feeling about this, but there's no way I'm going to lose all my money here because, well, that would be a disaster for me. Okay, well, then don't make that trade. Don't be a dope, okay? So I'll leave you with that. We'll see what happens tomorrow after the close, and maybe we'll make some money, but we're darn sure not going to lose a bunch of it, okay? See you.